You're watching the Fed, but the market already moved. And by the time they speak, you're already too late. And most people missed it. Let me show you what actually happened. Going into this week, everyone was focused on one thing, the Federal Reserve decision. Would they cut rates? Would they stay hawkish? What would Powell say? But while people were waiting for the headline, the real story was already unfolding beneath the surface. Look at gold. In early March, gold had surged to record highs above 5,400, driven by geopolitical tension and expectations of easier policy. But just days before the Fed decision, gold started pulling back toward 5,000. That doesn't make sense, at least not on the surface. Tensions were still high. The headlines were still bullish. So why was gold falling? Now look at what else was happening. Treasury yields were rising. The dollar was strengthening. And expectations for rate cuts, they were being repriced aggressively. Markets went from expecting multiple cuts this year to pricing in far fewer. That's liquidity shifting, not because of what the Fed said, but because of what the market expected the Fed would say. And that shift started before the announcement. Even this week, gold stayed flat as investors waited, caught between safe haven demand and higher rate pressure. In other words, the market had already adjusted. By the time the Fed speaks, the positioning is already there. The move has already happened. And this is the part most people miss. They think the news causes the move. But in reality, the market moves first, and the news comes after to explain it. That's the shadow narrative, the version of the story you don't see in headlines. It lives in bond yields, the dollar, and liquidity. So next time you're waiting for the Fed to tell you what happens next, remember this: by the time you hear it, the market already knew.